Welcome back. In business news, Singapore's core inflation eased to 0.5% in July, down marginally from the previous month and falling below analysts' forecasts. The decline was driven by cheaper retail goods, electricity and gas. But food inflation edged up as both food services and non-cooked food became more expensive. Private transport inflation also rose slightly due to higher car prices. Meantime, overall inflation eased to 0.6% in July from 0.8% in June. For now, authorities are maintaining their full-year forecasts for core and overall inflation at between 0.5 and 1.5%, though the outlook remains uncertain. One analyst says inflation is likely to stay at the lower end of that range.
If we are to see more cautious external demand because of just ongoing, say, conflicts in some parts of the region, we are still seeing front-loading of goods leading to slower demand, broader speaking, around the world. It will put downward pressure on price inflation overall.
And joining me with more is Jeff Ng, Head of Asia Macro Strategy at Sumitomo Mitsui Banking Corporation. Mr. Ng, welcome to the program. So with global trade tensions continuing to simmer, how might this impact import prices in the months ahead?
I think so far the impact of external inflation on Singapore has been relatively muted. I think owing to the fact that food and energy prices have been relatively stable internationally, and the Sing dollar has been fairly strong compared to a year ago, I think that has helped with the overall imported inflation to be relatively manageable here. But of course, with tariff risks upcoming and with potential of many event risks that can turn up over the coming year or so, there's some risk that inflation may be heading up. But a lot of these are still unknown. A lot is still dependent on the overall tariff that the global economy will end up with, and whether that can cause a slowdown on the global economy and on Singapore, or will it be on prices instead of on the economy. So I think that means that there's still a lot of uncertainties for inflation.
Are there particular trading partners or regions that pose the biggest risk to supply chains right now?
I think so far what we see is that the inflationary pressures in the US look fairly firm. However, I think there's still some deflationary pressures in China. So that is helping to moderate and cushion some of the upside risks that could be seen in other regions. So overall, I would say that the picture is fairly mixed, but on the whole, I think it's still fairly moderate at this stage.
And what are some upside risks that markets might be underestimating at this point?
I think some potential upside risks for inflation could be that if the global economy doesn't experience a slowdown, if the tech boom is extremely strong, and that could cause overall economic growth to be high and demand to be high, causing inflation to be higher, that could put some upside pressure on inflation. At the same time, we've seen so far this year many episodes of localized geopolitical risks in Asia and also in other parts of the world. So if this is escalated, causing higher food and energy prices, I think we saw that episode in 2022 during the Russia-Ukraine conflict. I think that could really cause inflation to go up higher. And I think there could be others as well.
Meanwhile, sectors like food and transport, they're still seeing a higher rise in prices. Are you expecting inflation to remain persistent in these particular categories?
I think overall they appear to look fairly stable at this stage. I think what we are seeing right now is that the international food prices have stayed fairly stable. And I think there's a lot of climate change risks to food prices, but overall so far we haven't seen that much disruptions to food prices this year. And a lot in terms of the transport prices could be determined by the COE prices here, or also by the oil prices. But I think when we look at it, it's likely to stay overall stable based on all these factors mentioned.
Is this more of a result of global supply issues, or are there domestic drivers at play as well?
I I think there could be many global drivers such as tariff policy that could cause higher prices of food and services going forward, while tariffs are being placed on goods, but there could be some increased charges that could spill over to services as well. At the same time, I think there could be some domestic pressures, although I would say that the onus is still very much on external food and energy inflation, given that I think a large part of domestic inflation is relatively contained. So I think some of the domestic pressures could include like the supply or demand for the housing market or for the transport market.
In terms of impact on people, Mr. Ng, how do these inflation trends affect the different groups of people in Singapore?
I think when we look at the latest inflation results for various income groups, it looks like the low-income groups may have gotten slightly more impacted in terms of higher numbers, but nothing too extraordinary. I think this could be attributed to some percentage points in terms of the weightage on the food as a category or transport as a category to their spending patterns. I think whenever I think the low-income groups may spend a greater proportion of food, for instance. So I think if food inflation spikes up, I think that could cause sort of like higher inflation in these income groups. I think it depends on I think which sort of like sectors and which kind of spending patterns that may then translate to the different income groups.
Looking ahead to October, Mr. Ng, what is your outlook on monetary policy then?
I think for now, it's still a little bit too early to say. I think I have a slight bias towards the Monetary Authority of Singapore looking towards easing monetary policy, especially if the outlook on inflation stays fairly muted for next year. Because right now, the central bank is still somewhat concerned that the external pressures caused by tariff or geopolitical pressures or other factors could still flare up and cause inflation to rebound. But if there's no upside or little transmission from this external risk, or if the global economy experiences a moderate slowdown instead, I think there could be some disinflationary pressures that then causes the central bank to be a bit more concerned about economic growth, because that may mean that Singapore register a much lower economic growth than the first half of the year when economic growth has been more steady. Due to front loading, I think economic growth is expected to moderate, and that may mean that the MAS may ease the monetary policy further in October. But if these downside risks do not materialize, then they can still stay in a wait and watch mode for longer.
All right, thanks very much for that, Mr. Ng. That was Jeff Ng from Sumitomo Mitsui Banking Corporation.